It's Thursday. I've got some analysis and trade ideas signals for you in a minute. But first, we're just going to look at the PCE number coming out of the US tomorrow. Now, I'm going to read the definition of what core personal consumption expenditure is. It provides a measure of prices paid by consumers for domestic purchases of goods and services. It excludes the price of food and energy. So it's not as important as CPI, Consumer Price Index, but it certainly is an inflation indicator. The biggest number that we've got out this week. The banking crisis seems to have taken a back seat now. Stocks recovered yesterday. Gold, which was a safe haven over the banking crisis, is easing as expected. A PCE number 4.7% is the estimate year on year, unchanged from the month before, rise of 0.4%. So just keep that in mind. A strong number would be a massive problem for the Fed. It should lead to further speculation about interest rate rises in April at the Federal Reserve meeting. That is obviously going to be a problem for the banks. They don't want interest rates up. They don't want bond yields up. Federal Reserve are really caught in this very difficult situation where they absolutely have to hope that inflation eases, but they can't do much about fighting inflation right now. Their hands are tied because if they put interest rates up significantly in the months ahead, it could lead to more problems in the banking system with the banks owning bonds at significantly higher prices. And of course, if interest rates go up, if inflation goes up, it will cause further losses on their long bond holdings. Let's move on to some financial markets. Gold was one of, if not the main beneficiary of the banking crisis, seen as a safe haven, somewhere to park your money in times of trouble. It often is the case. But now gold, as you can see from the chart, we have this potential double top, which is developing into something more negative. Now we have a bit of a trend line at 1950. We break below 1950. That is going to be quite an important sell signal in the short term, at least. Also note how we have potential moving average crossover. The blue line is the 100-hour, red line is the 200-hour moving average. Now, when the 100 crosses below the 200, that can act as a sell signal. That can indicate that we're just seeing the beginning of a move to the downside in gold. You can see to the left of the chart how the moving averages crossed over on the way up. And of course, that led to some significant gains, with the prices now holding below the 100 and the 200 moving averages, which is in itself negative. And of course, if the 100 crosses below the 200, that would be a further potentially negative signal. I break below that trend line that you see there around the 1950 area, joining the two previous lows. Well, that would also be a negative signal. So I've got a feeling that pressure is building to the downside in gold. We are short in the 1970 to 1975 area. That was my sell level for the week. It's working well down in the high 1950 area at the moment. And I'm tempted to hold short and see if we do break below 1950 and head down towards a good support level around the 1935, 1930 area. I do think there's a strong chance we could see that. And I'm holding a short position. I'm tempted to hold it for another 20 points or so to the downside. WTI crude, we did have a buying opportunity at around the $65.5 to $64.5 area a couple of weeks ago. If you've managed to hold on to a long position from there, it wasn't easy because we did have that big dip down about a week ago. But of course, we have recovered since. Now, we've got up to a strong resistance area at around $74 to $74.5. If you've held the position that long, you've taken about 1,000 pips. We're hitting strong resistance at $74 up to $74.5. We've reversed already. We've got some negative candles, especially on the 4-hour chart, which does indicate to me, well, that resistance level is clearly holding. I'm not that keen on a short position. What I'd rather do is wait for the market to dip down to a support level and buy in there, because I think oil is building into a bull run. So this would just be the start of the bull run, in my opinion. Now, I could be wrong. This could be a bear flag that you see on the chart there. I just don't think it is. Now then, the yen has been quite strong. Also, a safe haven status. The yen does tend to appreciate in times of trouble. So we saw that with the banking crisis. Now, being a trend follower, I saw that we were in a negative trend and I was looking to sell any yen pairs on a move back up, on a weakness in the yen. Now, we've broken above those resistance levels. So I'm now changing tack. I think that the yen will continue to weaken, just as I think gold will continue to weaken. And therefore, I'm a buyer on a dip to any support levels for the dollar yen, the Aussie yen, and the New Zealand dollar versus the Japanese yen. Looking at the dollar yen, you can see that the price broke above the blue 100-hour moving average, then the red 100-hour moving average, and then the downward sloping trend line. So we've broken through all the resistance areas. You can see why I had resistance at 131.60, 131.70. But now we've broken above that. I would assume that that will be a support level. And I really would like to see the price retrace back to that 131.80, 131.60 area so that I could jump into a long position. There is the Aussie yen chart. There is the price breaking above the 100 and the 200-hour moving averages and the downward sloping trend line. Now we could pull back to the support level. It looks like we've got a little bit ahead of ourselves in the short term. Perhaps I wouldn't suggest a short position in this pair, but I am sitting back and seeing if we can dip down to my buy level. Canadian dollar versus the Japanese yen. Well, Canadian dollar's pushed a lot higher than the other two pairs. The blue, the 100-hour moving average, certainly has turned up quite strongly and is now looking like it could cross above the red line, 200-hour moving average today for a further positive buy signal. So again, I would be a buyer on any weakness in the Canadian dollar versus the Japanese yen. It does look like it's starting to build into a bull trend. Another idea for you, the pound versus the US dollar has been in a nice strong bull trend. I think that will continue. We are hitting good support in cable at around the 122.80 area. We've got moving averages, we've got trend lines, we've got Fibonacci level there. So I will be interested to see if we get a low for the day around 122.80 in cable. I will admit that the euro dollar chart is messy. I can't get a clear trend or pattern out of the chart, so I'm just leaving that alone. I like to trade the euro US dollar. It's obviously such a major pair, but when I don't know what's going on, I just leave it alone. But the euro versus the Aussie has been pushing higher. Aussie's been quite weak. Doesn't look like the Royal Bank of Australia will need to increase rates much further at this stage. Got some weakening in price pressures there in Australia. But if we do see weakness in the euro versus the Aussie, we've got a very strong support level around the 160.40, 160.20 area. We've got a trend line there. We've got a Fibonacci level. We've got a 500-hour moving average there at the moment, which is obviously heading higher. I talked about a bullish moving average crossover when the price crosses above the 100 and the 200 moving average, and when the 100-hour moving average then crosses above the 200. And if you look down there in the middle of February, you can see how all those moving averages initially flatlined, then turned around, started moving up. Price broke above the moving averages and they followed the price up. And that really was such a great buy signal. It's worth keeping an eye on those sort of indicators on the 1-hour chart if you're a short-term trader. You can also see from this chart how the blue 100-hour moving average worked really nicely as a support level initially. We did dip a little bit around the beginning of March to the red 200-hour moving average. So both of those moving averages working quite well as support levels. In the end, we broke down towards the middle of March, but then recovered. So we'll see what happens if the moving averages do turn around and cross to the downside. That would be a negative signal. But right now, it looks like this is just a consolidation rather than a reversal. Okay, that's it. Hope these ideas help you with your trading today. We'll chat again next week.